Key learnings for me from Berkshire Hathaway's annual shareholders letter released in Feb 2023. The first thing that struck me very well is the statement that Warren Buffett mentions: Charlie and I are not stock pickers, we are business pickers. It's a change in the way you look at the business and the share market. So that's a very key learning for me. The second thing that I would like to take a note of is his statement that in a 58 years of managing Berkshire, his capital allocation is so-so. I mean, that shows his humbleness and his eagerness to learn more, his willingness to adapt. And that's very important for anybody who wants to invest in the market. There is a lot to learn, and I also would like to learn a lot from the market as well as keep on applying it. So once I am not looking at my returns as good, and if I'm not satisfied, that is when it gives me the willingness to learn. And this comes from a person who has been able to beat for a 60 years S&P 500 by more than 10%. He has shared the same, like in the S&P 500 return would have been 9.8%, and he has been generating over 19%, and still he says that his capital allocation has been so-so. That's a great statement, and that's the humbleness that I would also like to adapt. The third thing to learn is keeping your ego away when you are investing in the market. Everyone can make a mistakes, and you should be able to accept it and move on. Warren Buffett mentions in some cases also bad moves by me have been rescued by very large doses of luck, and he mentions the example of US Air that he managed to come out just before the corona. So it's very important to respect the market and keep your ego away, even if you are Warren Buffett. The fourth learning is to consider the dividends. I never looked at dividends as one of the reason to invest, but after going through this shareholders letter, I started to look at dividend in a much different way and in a different light. And he mentions in August 1994, Berkshire completed its 7-year purchase of the 400 million shares of Coca-Cola. The total cost was 1.3 billion, and it was a meaningful sum. The cash dividend we received from Coke in 1994 was 75 million, and that increased to almost 704 million in 2022. So now he is looking at dividend as well, and I never looked at dividend, and so I have started to visualize and look at dividend as a way of analyzing business as well. I am shooting a video on that as well, and that is to come very soon, and it will be the intrinsic value. It will be based on the dividend itself. The next learning from the annual shareholder letter is cash is king, and he is visualizing the top 500 companies, the total amount of cash that this top 500 companies generated, and what is the share of Berkshire Hathaway in that cash generated. He has 8 of the great companies, the top 500 companies. He owns a large chunk of 8 of those companies, and he mentions the example as well of the companies that he is invested in, and that's a good way to look at it, because he looks at business that are able to generate good amount of cash. Finally, we have some good one-liners from Charlie to learn a lot. So let me go through each of them one by one. The world is full of foolish gamblers, and they will not do as well as the patient investor. So investor will always do much better than the gamblers or traders, what he meant to say over here. The best among all is his line that patience can be learned. I am a very impatient person. I am so impatient that if I want to sell a stock and I know I can wait and get some better price, still I am too impatient to sell that immediately. Similar is the case with buying. So if I want to buy something, it's at a good price and I know I may get a better deal, but still I sometimes become impatient. And so patience can be learned, and I'm trying to learn as well. But now his statement proves a point to me that yes, you should be able to exercise patience as well. You can learn a lot from dead people, and this is so true that I remember a incident where on a news channel, somebody asked that my grandfather purchased 20,000 shares of MRF, and what should I be doing, buying, hold, or sell? I mean, because the grandfather was dead and he's the only one who would inherit that amount. Still, he's thinking about buying and selling. He is not able to get to a point where he has made hundreds of crores of rupees just by not looking at that investment. Because his grandfather was dead, he could be a patient investor. Now I am not too sure if he will still remain a patient investor or not. And the advice that he may have got is to book some profit and things like those and other things. But once you want to build wealth, you have to act like a dead people. Don't count on getting rich twice. This is very important because we try to allocate little money into our each of our investments in equity market. Now, if you do your research well, if you spend time on it, you spend hours and hours digging into the annual reports and finding out if there is anything that worries you, and if you try to get the courage to invest more amount into a stock, then you will become rich. But you will have one big winner, but if that big winner doesn't have too much of an allocation, then you will not make big wealth. Take an example of late Mr. Rakesh Jhunjhunwala. He made 1000x of his money in Titan. But that investment in Titan made him 5,000 crores because he had huge quantity invested in it. And if you want to invest such a huge quantity, you have to do the research, you have to do the homework, you have to have the patience, you have to take time to say invest in parts over a long period of time. It can't so happen that you can just put in all the money in one go at without doing any research. If you are doing it that way, then it has to be diversified. You will make small portion of allocation to that, and that will not help you to get rich or build wealth. I hope this gist of the Berkshire Hathaway annual shareholder letters released in Feb is of help to you. Let me know in the comments below which is your favorite one-liner from the annual shareholders letters of Feb 2023.